For the past year, HIMS and HERS Health was the undisputed darling of the telehealth sector. It was a disruptor that promised to democratize access to high-demand medications, and investors couldn't get enough of it. But in early February 2026, the story hit a massive regulatory wall. In just a matter of days, the stock went from a high-flying growth play to a center of extreme volatility. Is this the end of the story or a temporary hurdle? Today, we are diving deep into the facts, the record-breaking numbers, and the specific buy zones that could make or break your portfolio. The breaking news surrounding HIMS has been a complete roller coaster. On February 9, 2026, the stock plummeted over 20% following a double blow. First, the FDA signaled a crackdown on non-approved compounded GLP-1 medications. Almost simultaneously, Novo Nordisk filed a massive patent infringement lawsuit seeking to ban their compounded semaglutide products. By pulling their new $49 pill just days after launch under pressure from the DOJ, HIMS signaled that their legal ground might be shakier than investors realized. The market's reaction was swift and brutal. Why did it fall so hard? Because HIMS had built a massive part of its recent valuation on the weight loss hype. When the legal loophole for compounded drugs began to close as Big Pharma resolved supply shortages, investors panicked, fearing that HIMS' fastest-growing revenue stream was about to vanish. However, to understand if this massive fall is actually justified, we have to look at the hard fundamental data, and here is where it gets interesting. The numbers for 2026 show a company that is growing at a staggering pace, far beyond just weight loss. In December 2024, revenue stood at $1.47 billion. By December 2025, that number surged to $2.34 billion. That is a massive year-over-year increase. If we look at the last 12 months, or LTM, the total revenue has reached $2.2 billion. These aren't just projections. These are the actual realized numbers from the balance sheet. But it's not just about top-line growth. The profitability metrics show a company that is becoming more efficient as it scales. But the real story is the transition to profitability. Looking at the bottom line, the net profit for the last 12 months has officially hit $134 million. This is a massive turnaround compared to previous years and proves that the model works. In December 2024, the company reported a net profit of $126 million, and the momentum has only continued since then. This efficiency is also visible in the operating margins. We saw the margin sitting at 4.2% in December 2024, and it has now climbed to 5.2% for the last 12 months. This steady increase shows that HIMS is successfully managing its costs while scaling at a record pace. With over $1.1 billion in cash and short-term investments, HIMS has the financial war chest needed to fight its upcoming legal battles and pivot its strategy if necessary. Now, let's translate these numbers to the chart. Despite the current market noise, the technical setup is very clear. We are looking at a short-term buy zone between $109 and $151. This is the key area for accumulation right now. Looking at the bigger picture, the long-term targets are set between $242 and $250. As long as the support holds, the path toward these levels remains the primary focus. The upside potential from the current zone toward that $250 mark is where the real opportunity lies. In conclusion, HIMS and HERS is at a crossroads, but it is far from defeated. The company is being forced to pivot away from its controversial compounding strategy, but the underlying business is stronger than it has ever been. My final advice? Don't let the headlines blind you to the balance sheet. If the stock stays in the $16 to $18 green zone, the risk-to-reward ratio is heavily skewed to the upside. The fundamentals are record-breaking, and even if the weight loss pill is delayed, the core platform is a powerhouse. What do you think? Is the Novo Nordisk lawsuit a death blow, or is this $17 price tag the ultimate gift for long-term holders? Are you buying the dip or waiting for the legal dust to settle? Let me know your moves in the comments below.